Hi, everyone. Many thanks for joining Carbon Tracker's webinar today, Wind Congestion, how the UK is wasting millions of consumers' money each year and how to stop it. I'm Evgenia Zylas from the Carbon Tracker's communication team, and I'll be briefly introducing the session this morning. So the runtime for today's webinar is 1 hour, and the agenda includes a 10-minute presentation from report author of our recently launched report, Gone with the Wind, and power analyst Lorenzo Sani, followed by a panel discussion with representatives from Renewable UK, Piclo, SSC, and Gresham House Energy Storage Fund. We will then move on to hear from the National Grid and finally end with a Q&A, which at this point, we kindly ask if you have any questions throughout the session to submit them through the Q&A function found at the bottom of your screen. And we invite you to ask any questions, and if we don't have time to answer them live, we will be following up with those. That's all from me, so I'll give the floor to Lorenzo. Thank you.
Yes, and thank you, Evgenia. And good morning, everyone, and welcome to this webinar. This morning, we will be discussing grid congestion and wind integration in Great Britain. And this webinar comes on the back of our report that we published earlier last month. And now I'll go into the presentation. I hope the slides are moving. Yes. Okay. So with this research, I set out on a journey to assess the health of the Great British electricity grid. And what I found, unfortunately, is not very promising, because while in the past years, the UK massively invested in new renewables capacity, investment in the transmission grid stalled, and this created quite serious consequences. So due to a lack of planning and permitting delays, the UK is not fit for purpose. The UK grid is not fit for purpose and is wasting a record amount of clean electricity. The grid is not able to deliver to consumers all the clean electricity produced by wind farms because there aren't enough cables that can move that electricity from the place where it's produced to the places where it's consumed. And as a consequence of this, the grid is forced to pay wind farms to stop generating and to compensate gas plants to ramp up generation and compensate for the gap. And unfortunately, with my research, what I found is that this problem, which has been growing in the past years, is not set to get better anytime soon. In fact, we estimate that wind congestion costs are set to quadruple by 2030. And this, again, is a quite significant problem. And I will quickly, in a moment now, I will go through the details, but I will start with a simple example to explain you what is going on. So I would like to bring you back to the 9th of April, which is Easter Sunday. And it's a bank holiday, so electricity demand is low. At the same time, it's a windy day, and Scottish wind farms are set for a very high electricity output. And what you see here on the screen is the set of electricity is the electricity mix for that day. And you can see in the light blue the role of wind that is very significant. And in some hours of the day, its share could cover 3/4 of the electricity demand. So it could have been a very significant day for renewables generation. However, by the time the electricity is delivered, we see a very different electricity mix, which is represented on the chart on the right side. And we found that gas generation is much higher than expected and wind is less. So gas generation is represented by the gray dotted bars, and the lost wind generation is the red dotted bars. And so what happened here? Why are we using more gas and curtailing wind? So the system operator, once it's received the market results, has to check whether the electricity flows within the systems respect the size of the cables. And unfortunately, it found that the resulting electricity flow from Scotland to England was bigger than what the cable could transmit. So basically, the cable was running at a full capacity, similarly to a highway with a bad traffic jam, and couldn't transport any more electricity. So as a result, the system operator had to request some wind farms to turn out to curtail their output and some gas generators to compensate for it. And then as a consequence of grid constraint, clean and cheap electricity is wasted, and the final electricity mix is much more expensive and dirty. In a single day, the cost of this mechanism was about 40 million pounds that were paid by all the consumers, and this also incurred in significant additional emissions. In this day, we estimate that it was 26,000 tons just because of this increased utilization of gas. And here we see what is the main theme that I will be talking about, that this is both a problem in terms of cost and in terms of climate ambition and emission. So going a little bit more in detail, we call these events wind congestion events, and they happen much more often than you might think. So in 2022 alone, the system operator had to intervene about 200 times to curtail wind generation, and some of these events lasted up to 3 consecutive days because there was so much wind and the grid couldn't move it around. And we estimate that overall the cost of wind congestion in 2022 were about 800 million pounds, and this was equivalent to about 40 pounds per household, and the amount of wind that was wasted would have been able to produce enough electricity to satisfy the demand of 1 million households. Again, very significant figures here. And now, touching a little bit on what is causing this wind curtailment and what is the reason for that, I'll show you here in this chart. So 90% of all these wind curtailment action are taken because the system operator has to intervene due to some issues with the grid. So 90% of them are due to grid congestion, and 95% of them are experienced by wind farms located in Scotland. And I'll show you in this map why. I think something, anyway, those are supposed to be wind farms, I don't know what happened, but yeah. So this map represents the electricity grid in UK, and the red line represents the boundary, which connects the Scottish electricity grid with the England electricity grid. And what happened is that the capacity between the two grids is limited. So the capacity connecting the two grid is smaller than the amount of wind that is installed in Scotland. So on very windy days, not all the electricity that is produced in Scotland can be exported to England, and then we experience this problem where the system operator has to request some wind farms to reduce their output just because it cannot move all the electricity. And in the coming slide, I will focus on modeling especially this bottleneck and showing how this problem could grow in the future. So starting from the transmission grid, there are now 4 major projects that are supposed to relieve this bottleneck that will connect Scotland and England. This project will come online in the coming years and are supposed to increase the transmission capacity to almost double the transmission capacity between the two grids, as you can see in this chart here in the red line. However, once we look at the wind capacity, we can immediately see that this is not enough, because the blue line represents the projected wind capacity for Scotland, and we see that it's growing 4 times faster than new transmission capacity, and this could create some serious problems. So we try to calculate the cost of this, and it's plotted in these gray bars in the chart. And we can quickly see that the situation is quite bad. So congestion costs are set to grow by 3 times only in the next 3 years. So by 2026, they will treble, starting from the 800 million we paid last year. And then they could surpass 3.5 billion in 2030. And this, to put it in context, will be equivalent to an additional cost of £200 per per year per every household. And the amount of wind that will be wasted will be roughly equivalent to 20% of the Scottish wind output, which is equivalent to losing a 6 gigawatt wind farm disappearing just because we cannot transport all this electricity through the grid. And finally, the emission from balancing measures that the system has to take to rebalance the system could amount to almost 50% of the power sector emissions. Again, a problem both of cost and climate targets. So we didn't stop our analysis here. We wanted also to understand how these costs are linked with the timely delivery of projects. So we modeled the two scenarios where the 4 major cables are delivered either 1 year or 1 year early or 1 year late. So the results was also very surprising to me, highlighting that the delivery speed is of the essence for this project. In fact, if these projects are delivered only with 1 year of delay, the extra cost could reach 3.6 billion, equivalent to roughly half the investment cost of needed to build this project. And similarly, if these projects were only 1 year early, they could generate savings of almost 4 billion. So again, this stresses the importance of timely delivery, and delivering these projects only 1 year late could cost the equivalent of half the investment costs needed to build these projects. So this should really put some pressure on project developers and regulators that are set to approve these projects. And now moving to solutions. So the first most obvious option that everyone should think is, why don't we build more cables? So we modeled this, and actually new cables are a very good economic decision because they could pay back half of their investment costs in 1 single year. And they have also many additional benefits. They have a very long lifetimes, about 40 years or more. They have a short payback time. They increase the grid stability, and overall, they're no regret option because they improve the stability of the grid. However, like we found that unless urgent actions are taken, it would be very unlikely for additional projects to come online before 2030. And this is again because of a very long authorization process and a supply chain that is increasingly more tight. So, however, as the wind deployment is not set to slow anytime soon, it's very important for the government to really start planning now for cables that will be needed beyond 2030. And this analysis clearly shows the urgency of that. And what are the costs if this is not taken into account? And finally, another option to deal with wind congestion is increasing the deployment of energy storage. Storage could absorb the surplus of wind generation when the cable is congested, and then release electricity during low wind generation periods. In our report, we show a scenario which features an ambitious but feasible deployment scale of a storage solution. We modeled battery storage, pumped hydro storage, and hydrogen electrolyzer, and all of them combined with their different time scales and duration can reduce the amount of wind curtailment by half by 2030, but also bring many additional benefits to the grid in terms of increased grid resilience, lowering the emissions during low wind periods, and then by green hydrogen, you will be producing a green fuel that can be used to decarbonize either other energy-intensive sectors in Scotland, for example, industrial clusters, or to produce seasonal storage. And one last thing before concluding is that I want to stress again that we found that in Scotland there is a very interesting potential to produce green hydrogen, and most of these will be produced from the surpluses of wind generation. And we modeled that Scottish green hydrogen production could satisfy about half of the UK's demand for 2030 for hydrogen. So it could become a very interesting opportunity for the region, and it could help to decarbonize hard to abate sectors in the region, such as the Grangemouth industrial complex. And now finally moving to conclusions. So the main message I would like you to take home is the following, that wind congestion, if unresolved, could cost billions to British customers and undermine the 2035 decarbonization targets. So we strongly recommend government, policymakers, regulators, project developers, anyone who is involved in this, to accelerate project delivery by streamlining the permitting process, incentivizing private investment, and providing incentive or penalties for delivery. Then to anticipate investments in strategic infrastructure so that we start building new cables before the problems occur. And then develop an electricity market which is supportive for low carbon flexibility and includes some locational signals that can incentivize the storage solution to be built in the right place of the grid. And finally, focusing on accelerating the commercial development of key technologies that are needed for 100% decarbonization. And here I'm talking about technologies such as hydrogen electrolyzers and longer duration energy storage that we know will be needed in a decarbonized system, but are not 100% commercial yet. So those technologies might need an extra support. So this is the end of my presentation, and thank you for your attention. I hope that you found something interesting for all of you. And just as a disclaimer, you can find our full report for free on our website, and feel free to reach out directly to me on the email address you can see on the screen. So now, without further ado, I will stop sharing my screen and introduce the panel. So I have the pleasure to introduce you to our panel joining today's. And joining this discussion, we have Barnaby Wharton, who is the Director of Future Energy System at Renewable UK. Then we have Gemma Stanley, Senior Policy and Regulatory Manager at Piclo. We have Angus McCree, who's the Director of Market Development and SSE, and Ben Guest, Managing Director at Gresham House. Now we will do a 20-minute panel discussion with the panel, and then I will be asking Rob Nickerson, who is the Economic Assessment Manager at National Grid ESO, to give some closing remarks from the point of view of National Grid, and then we will open the question for question from the audience. And I would like to start with you, Barney. So I know that in these past weeks you've spent a good amount of time reading the grid development plans of National Grid, both the existing one and the past ones. So you're probably the most suited to answer this question. Why have we gotten to this point? So why is it that we don't have enough cables and we're not building enough?
Thank you, and that's a pretty big question. So first, just look, great. It's a great piece of work, and it's an incredibly useful analysis to drive forward this debate. The numbers and getting into like the BMRS and understanding kind of the curtailment of things is a real challenge. So congrats and thanks for this really good contribution to the discussion. So yeah, why are we where we are? So yeah, as I say, I've been kind of looking back over the past network operator assessments, which is the annual report that the ESO produces, looking at what grids we should be building in future to meet our requirements. And the overall sort of arching message of all that is that kind of what you're saying here, this isn't new. We have known for quite some time that we're going to need to build a lot more network in order to bring power down from Scotland to England. And actually, if you go back to the Electricity Networks Strategy Group, which published a report in 2012, not only was the Western Link being built, but it recommended the Eastern Link from Peterhead down south. So 11 years ago, saying we need this. And if you look at the NOAAs over recent years, every NOAA since 2016 has recommended to proceed with at least one, if not two, of the Eastern links. And yet they only got their final needs case approved from Ofgem last year. So why have we not been able to do this when we know it needs to be done? And I think part of it is we have this annual cycle. So every year we kind of start from scratch, like what do we need? to get to where we are. And because the baseline, we're building lots more renewables, that baseline is moving. And therefore, we're kind of stuck in this analysis paralysis. Like, well, we won't do that, but actually we'll do this. We'll hold that and we'll build one here. And the next year, it's actually we'll hold that one and build this one here. And then we've got to the point where it's actually, oh God, we need to build everything everywhere. And that is a challenge. And I think the really interesting thing about your analysis is that the scale of payback and the pace of payback in this is incredible. I think anyone investing in anything, if you could say you will get your money back within 2 years, you would jump at the opportunity. So yeah, we talk about kind of the network options assessment. These are no longer options. These are things we just have to do. Two other quick points I'd like to make. One is, curtailment will always be part of the system. An efficient system has some curtailment in it. So otherwise you're building a network that some of which you'll only use for a couple of hours a year. So let's not say no curtailment is going to happen. And also, just a really important point from your charts you showed there is also the increasing cost of gas is what is driving loads of this cost as well. And that's really important to be aware of. And I think your report makes that point really, really well. So that's kind of my take on it. But yeah, as I say, thank you so much for a great report.
Well, thank you so much. I think your answer is very clarifying. And just a quick follow-up on this. So as I said, Ofgem has got a lot of responsibility on this, but we've also seen that in the past month, a lot of things are starting to move. So they finally approved with the ASTI framework, they gave a strategic priority authorization process to these 4 cables. And there are now the discussion of giving to Ofgem a net zero mandate. And do you think these measures are enough and that we will see a progressive change in Ofgem, or do you think more is needed? And if in the case, what that more is could be?
I think the Ofgem remit, so giving Ofgem a net zero remit, is necessary but not sufficient. The ASTI stuff is a great development. So accelerating that investment and giving sort of much faster approval for those projects, again, brilliant. We need to see all that embedded in the whole process, because that the ASTI framework it's identified 17 projects that are really essential to reach 2030. We probably need a lot more than that. We will need a lot more than that. So let's embed that across the system.
That's fine. Take your time.
I'm done. I've got something in my throat. Carry on.
Okay. Thank you, Barney. And well, this gives me the opportunity to move to Angus. So Angus is the Director of Market Development and SSE, and during his long career, he has experienced firsthand the transformation of the power system. And so, first of all, I would like to ask you, what do you think are the implications for wind developers in Scotland, and whether they're starting to put these aspects into their project finance decision, into their investment decisions, or what is going on that side?
Thanks very much, Lorenzo. First of all, again, thanks for creating such a good report. It's really brought something into the debate which has been a bit underplayed so far in terms of the role of the delay in the transmission investment in terms of getting to where we are today. So thanks very much for yourself and the team, and thanks for hosting this event today to get this message out to a wider audience. In terms of what this means for wind developers, I think what it primarily does is it highlights the fact that there's a huge regulatory risk that is in place, which is that under the past 10 or so years, wind generators have deployed in areas where there is potential congestion on the assumption that that congestion will be socialized, and the congestion is temporary because it will be followed up by grid investment. And some of the debate that is going on at the moment kind of overlooks that, and it highlights or tries to describe the congestion problem as wind locating in the wrong place. Now, at the moment, wind has got a pretty strong locational signal to invest in places where minimizing transmission cost is part of the objective, but they have to take other factors into account, such as availability of sites and the cost of developing in these areas. And that complex calculus has led people to develop in Scotland. I think if there is the risk that the transmission delay consequences fall squarely on the shoulders of wind generators or any renewable generator anywhere, because this at the moment is a wind problem in Scotland, but it will potentially be a wind problem in East Anglia or a solar problem in Cornwall or wherever. That will raise a really significant risk issue for these parties. It's something they can do nothing about to mitigate, and that will start to feed into investment plans, and it will have two consequences. One, it will delay investment plans, but probably more importantly for the transition, it will likely, almost guaranteed, increase the cost of development, because that extra risk will feed into the cost of capital, and developers will seek to factor that into their plans to develop. Now, does that have to be the case? No, it doesn't, because ideally what we should be saying is here is recognizing, as you've done, that the primary problem is building the grid out to actually harvest the energy from where it is, because it's just a fact that renewables are primarily dispersed away from where the demand is. And so the transmission investment is an inevitable part of that. And I suppose one follow-on element, Lorenzo, is that looking at alternative things that can, to some extent, take the place of additional transmission investment would go some way to reassuring wind investors that that risk was less of a problem for their investment. And the things that I mean there are things that look to promote electrification in areas where we already have a surfeit of renewables and we're going to get more. Look at and also look at methods to, I suppose, de-risk the deployment of storage, because storage to some extent is also exposed to a very significant policy risk in that if transmission doesn't come, potentially storage becomes pretty much redundant to some extent as well, because the energy storage is a national issue, not just a regional issue. But if the transmission does come quicker and more, potentially that has a fairly big impact on the business case as well.
Yes.
Hopefully that's answered your question.
It definitely did, and I think you opened a few other points that we should probably discuss. But since you started talking about storage, maybe I will start from here. So with the report, I found that energy storage, especially longer duration energy storage, can play a very important role in reducing wind curtailment because of its long duration, its nature of long duration. So, however, we see that this project take a lot of time to build. They are very capital intensive. There are many risks upfront to build them. So I know SSE has got a good experience in this. So what is your experience on this? What would help to deliver this project faster? And yeah.
So thanks, Lorenzo. Yeah, we have been trying to kind of build a case for a fairly substantial pump storage investment for at least the last kind of 12 years. That kind of is a timescale that kind of links into how long it actually takes to deploy one. And so these projects are really long term. However, one of the issues is that they're very capital intensive, and as you say, they are therefore very exposed to the market conditions that they then fall into. And our position, having thought about this for many years, is that de-risking of the commercial side is really important, because these projects face huge operational and construction risks. Adding in commercial risk is basically pushes the projects over the edge, and therefore a mechanism or a series of policy actions that can de-risk these projects is really important. And I suppose I'll go through three of them. First one is adjusting transmission charging to assist in the business case for pump storage, and reflecting the fact that storage, especially longer duration storage, has the ability to displace transmission investment. I think secondly, giving access to capacity mechanism, which is really difficult for long duration storage to access at the moment, basically because of the time scales and the way that the capacity market auctions run. But then lastly, I think, is something to add to the de-risking of the exposure to the market case, because projects are very exposed to both the high prices and the low prices, and that makes them difficult to invest in. And where people have done merchant investment recently in pump storage, they have had some pretty significant shocks because market conditions have not turned out the way that they had expected. And our preference is for development of a cap and floor scheme, which directly encourages longer duration storage and allows that to be de-risked in the same way as the CFD scheme de-risks variable renewables.
Yeah, that is that is very clear. Thanks. I totally see that policy is needed, clarity is needed, and certainty is needed. And yeah, those are all very good points, and I think you touched on the main aspects, on your main barriers. And since we're starting talking about solutions, I'd like now to give the floor to Gemma, who's looking at this problem maybe from a different perspective. So on how we can take advantage of flexibility. And so I would like to ask you, Gemma, if you could start telling us more about the local constraint market that Piclo is piloting in collaboration with the ESO, especially on the Scottish England constraint. And
yeah, sure. Yeah, thanks for having me. And just to echo what the other panelists have said, really interesting and topical report. So really happy to be here today to discuss it. For those of you who don't know Piclo, we're an independent marketplace for flexibility services. We're probably most known in the UK for our work alongside distribution network and system operators like UKPN, ENWL and SPEN. But here today to talk about one of our more recent developments, as Piclo Flex was selected to help facilitate a new market established by ESO called the Local Constraint Market. And Local Constraint Market, LCM, was announced last year and is being developed to help resolve transmission level constraints at the Anglo-Scottish border, specifically due to the high level of wind generation, as Lorenzo's report really neatly goes into. Currently, the way that this is tackled by ESO is through the balancing mechanism, but this market is quite notoriously difficult, complex and costly to become a part of, and has size restrictions like a 1 megawatt threshold, which makes it particularly difficult for a lot of smaller sized assets to take part in. So LCM has been established as a day-ahead and intraday market to act as an alternative to ESO addressing these locational constraints in Scotland through the balancing mechanism. So it helps source flexibility through widening participation and providing an easier route to market than the BM. Importantly, in the LCM, there's no size threshold. So any sized asset is able to participate. And in the initial flexibility competitions that we've just started to run with ESO to kind of get this up and running, this has already started to come through, which is really, really encouraging. So where we've got to so far, the last couple of months been focused on building out the platform functionality and the marketplace functionality with ESO. And over the last month or so, we've been running flexibility competitions at a day-ahead basis with a small number of FSPs to test the functionality and make sure everything's running smoothly. So in these initial stages, we've had flex service providers like Cub UK and Orange Power provide about 3 megawatt hours of flexibility from residential and industrial demand response, showcasing nicely the kind of importance of having this access to market for these smaller scale assets, which have included things like electric vehicles, heat pumps, electric heating. And so, yeah, been a really positive start to this initial stage of the market. We're now at the point of wanting more FSPs involved to start scaling this. So I would just say as a call out, if you are listening and have assets based anywhere in Scotland, please get in touch. We'll be happy to chat and talk with you about how you can get involved.
Thank you. That is great. And I think you're showing that there is this great potential that is now untapped on the demand side. And I think that this links up well with a worry that many people have, that with increased electrification of transport, heat pumps, the system will always become more difficult to manage, because if everyone comes home, plugs in their EV at the same time, turns on the heat pumps at the same time, then we will have a lot more volatile demand, a lot more higher peaks, especially when we don't need them. So I think what you're showing is that we can transform this also in an opportunity. And maybe as a follow-up, like what do you see is needed to unlock more flexibility, to bring more customers on? Is it an economic incentive? Is it information? Is it some policy barriers? What do you see are the main barriers for you?
Yeah, I think you're absolutely right in the sense that I think the way Ofgem phrased it recently, you've got the opportunity for any asset connecting to the network to either be valuable and help contribute to a smart, flexible energy system, or they phrase it as a parasitic, where they're not engaging and have the potential to, I guess, exacerbate problems. But yeah, I think this is a good example of a case where you can use additional demand in the area to prevent the curtailment of wind, and that's only a good thing. I think what's needed to move these things forward, I'd say firstly, like a change of narrative and better education on flexibility. I think the recent developments like the demand flex service from ESO as well, and the level of engagement that had across residential consumers was a really positive example of better education on flexibility more generally, and also in the media. But I think there's a lot more to be done as we transition over this decade to enhance that. From a flex market perspective, I think revenue stacking and better coordination across markets is such a key thing that needs to rapidly improve, so that you've got flex service providers who are able to participate easily across multiple markets, and make those business cases work. So I think that's a really important development point that should come over the next couple of years. And then I guess I would say another, just in terms of the approach that needs to be taken, getting going with solutions. Like, I think LCM is a really good example of, yes, we've known about the problem for years and more could have been done in that time. But if there's a way to resolve problems, put forward a solution and get going with it, and you can iterate and collaborate with the industry as you move forward to kind of improve it, but actually taking action and making a tangible improvement is so key to many of these areas. I think LCM is a good example of that. Again, the demand flex service is another example of that as well. So yeah, those three key areas, I would say.
Yeah, that is great and very clear. Thank you. And now I will try to shift the point of view a little bit and see this problem from an investor point of view. Sorry. And this is why I would like to give the floor to Ben, who manages the UK largest battery storage portfolio, which is set to reach 1 gigawatt of capacity by the end of this year. And so, Ben, as an investor in battery storage, like, which opportunities are there in the UK market, and especially which of these are generated from the grid? And as a quick second question, like, is there a risk that as more cables are built, some of these business opportunity for storage could go away?
Thank you very much. Those are good questions. So what are the opportunities? I'll almost answer the second question a little bit at the same time as addressing the opportunity, because at a simple level, what batteries are doing, stating the blindingly obvious, is storing energy when there's too much of it. And that can either be at a national level or at a system level. What we've been talking very much today is at a system level. That's the typical expression for the listeners who don't necessarily know what the common expression is for what the network is. They call it the system. So you've got system constraints, and this is what this is all about solving. But then you've got often called thermal constraints or just national constraints, where the simple reality that wind and the overall renewable fleet, and this is our rule of thumb internally, can generate anywhere from very close to zero to twice the expected level on average at any moment in time. So that is the intermittency that you're dealing with at a national level, which are exacerbated by the system constraints that you've spoken to. So if you start building the cables, the fundamental realities remain that renewables are wildly intermittent in this country. So the opportunity that we see is that batteries, and going into this over 5 years ago, we had the opportunity to look at all sorts of different things. We chose batteries. Why? Well, they don't require subsidies, so they're cheap. They can be built quickly. They have the best round trip efficiency of any technology, really by quite a long way, which means that the energy that you store can then be released with upwards of 80% efficiency, and it's upwards of 85%, and goes up the larger the battery you use, because the energy goes in more gently in and out of the batteries, the bigger battery you use, and that means you get less losses. So batteries are really, really powerful. And so the opportunity to deal with these enormous levels of intermittency are really there. What we're not seeing now, and is an opportunity in the short term, is that batteries aren't being used. Those two charts that you gave of what's the final energy profile and what could have been, or what outturned, shows that, and I don't know if you left it out because it was a rounding error, but there were no batteries mentioned at all in that chart, and that's in the really recent past. So batteries are not being used by National Grid in the BM at this moment in time to any great extent. Why? It's not just because the system constraints were the only constraint during the days that you've highlighted. And just to sort of help other listeners, that's sort of an example there is where you've got to dial down the wind on one side, but demand hasn't gone away. So you've got to dial something up on the other side. And it's that effect of basically wasting energy on renewables because it can't get to the customer, and therefore having to dial something up on the other side of the constraint being the action. But the national, for large amounts of events where the extremes of renewable generation aren't in play, especially wind generation, which is sort of very much constrained behind these physical cable limits, the battery could be very, very useful. But National Grid systems are still too manual. The way that gas assets need to be dispatched tends to crowd out batteries, resulting in this crying shame of the situation where we're curtailing. So a lot of that curtailment right now is completely unnecessary. It's nothing to do with cables. It's to do with the fact that when National Grid has too much wind on the system, it has to dial up this gas, push out renewables to then be able to move the gas primarily up, but up and down effectively, to deal with the intermittency and the flexibility, the volatility in the renewable generation. That's fundamentally the first problem to solve. That's the first opportunity for all forms of flexibility today. We are wasting upwards, in our estimation, upwards of £500 million a year from this alone. So that saving would materialize immediately as soon as National Grid's control system is upgraded. But then the long-term reality remains. And I liked your chart showing that energy storage, different types of storage are partial solutions. I didn't like, but I understand the fact that 7 gigawatts of batteries could only produce a 1.3 billion saving versus the much larger saving potentially from pumped storage and hydrogen. I think the implication there is the other two technologies are much longer duration, while batteries typically are shorter duration. Batteries don't need to be short duration. There just isn't today the economic case for them. So if you build 7 gigawatts of batteries, and there is an economic case for 8 hours of effective curtailment avoidance and constraint avoidance, system constraint avoidance, batteries will get built to that capacity. And so I'm excited that actually a lot of that saving can be met by batteries. And why am I so excited about that? I think that it comes back to this point that batteries have a fantastic round trip efficiency, which is a point that's not talked about enough. Because if you go, we can save the constraint issue by storing energy that's released, but you lose 30% of it, or in the case of hydrogen, something, if it's turned back into electricity, something like 60% of it, you really haven't solved the problem. You've just put the problem somewhere else. So if we can understand that batteries can actually be built to much longer durations if there's the economic case, then that case will grow based on all the extrapolation of wind investment and generation. then the opportunity is very, very large. You know, ultimately, we're at 2.5 gigawatts of batteries today. We're going to go to a need of about 40 gigawatts. I think that's a fairly common view amongst most pundits. Where there isn't much commentary is the duration. And I suspect the duration will go up towards 6 to 10 hours and probably towards the mid or upper end of that range. And that overall just means that the opportunity for energy storage investment without any cost to the consumer from a subsidy perspective, and with a very quick reaction time, speaking to your need for quick solutions and investment decisions being taken independent of government entities or government related entities in any way, I think is very exciting to address a significant portion of the clearly very large problem.
Nice.
We need everything there.
Yeah, thank you so much. I think you brought a very interesting perspective, and you covered the 2 follow-up questions I had for you in your very good.
I just jumped in. Yeah.
No, that was great. I think it gives a good segue to for me to give the floor to Rob. So I would like to, Rob is the Economic Assessment Manager for the National Grid ESO, and is part of the team that develops the strategic network plans for the electricity grid. So I would like you to take all these inputs that you got from the presentation, from the speakers, and I would like to hear what are your thoughts on this. I think National Grid ESO has been mentioned in different part of the conversation, and yes, like the floor is yours.
Yeah, thanks, Lorenzo. Yeah, just a little bit about myself first. So my name is Rob Nickerson. I'm currently the Economic Assessment Team Manager within National Grid ESO. And that's the team that sits within strategic network development on our network side of the ESO. I spent 10 years, just over 10 years in the industry, most of that with National Grid, National Grid Group, originally on the sort of the gas side of the business, where I was gas network analyst, looking at the gas network planning, before then spending a considerable amount of time in the strategy and regulation team here within the ESO, looking at things like our future energy scenarios that we publish annually before my current role. I just want to thank Lorenzo for the presentation earlier. It's a really good highlight of, as Lorenzo said, the health of the transmission grid. I think as we've seen, very high deployment of renewables, and that's a success that we should celebrate as our transition to net zero. However, that's come with a challenge to be able to dispatch all of those renewables, particularly when it's very windy in Scotland due to the level of network constraints. And just taking a moment to sort of reflect on those and network constraints and why we have them. Our current sort of regime is a connect and manage regime, where we facilitate connection of new generation, considering what local works or enabling works are required. However, the wider works, which is the sort of larger transmission reinforcements that are required to shift large volumes of power across the country, those wider works are not required at the point of connection, and that's where they are studied and assessed and developed, and hence there's that element of lag that we're seeing at the moment. So I think, Lorenzo, it was a really nice example that you provided on how we as the system operator use the balancing mechanism to ensure those network constraints are respected, and to ensure that we're not overloading the cables that we've got at the moment, and keeping the system in balance second by second. However, as noted, we see that the instances of those actions that the ESO is taking is increasing, and consequently that's increasing the associated cost. We've seen that ourselves in our own analysis and our own publication showing expected constraint costs increasing. The point that you made around timely delivery of network reinforcements is a really good, really solid point. some of our own work on the ASTI program. So for those who don't know, the ASTI program is Accelerating Strategic Transmission Investment. And it's a new group of, it's a new regulatory framework that's being established, where a set of network reinforcements have been carved out from the current regulatory process. They get a single signal to proceed, and the 3 TOs will be responsible for delivering those. So that's a great step in the right direction, and we're pleased to see that that's being consulted on, that the TOs will have a license obligation to deliver those projects on time, and that the timing was an area where we've fed into the analysis and thinking in that space. So that license obligation that's being proposed on the TOs to deliver on time will help address that point about the importance of timely delivery of transmission reinforcements. And then Lorenzo also took us through some of the solutions, so not only the network reinforcements, but also things like storage and electrolysis. Later this year, we'll be publishing our next NOAA, Network Options Assessment, or Transitional Strategic Central National Plan. That will be December this year, and that will include consideration of storage and electrolysis and how that can also play a role and work in collaboration with traditional transmission network reinforcement. So sort of moving on then, we next heard from Barnaby from Renewable UK. We heard why we've got here and how the ESO's network options assessment publications have highlighted the need for new network for many years. And Barnaby reflected on the sort of annual cycle. I think you described it as a analysis paralysis, I think was the words you used, Barnaby. So for those that don't know, that annual cycle of work is, it follows sort of 3 ESO publications. So it starts with our work on the future energy scenarios, where we look at how the changing demand for electricity and gas will evolve, and how the generational supply mix will also evolve to stay in sync with that evolving demand. The FES, or the electricity side of the FES, is then assessed through our electricity 10-year statement, where we understand what impact that changing energy demand landscape will have on the current network and the set of network constraints that we currently have. And from there, we identify places where we're looking for reinforcements. That's where the TOs will then go and develop a set of options for us, which is the set that we study through the network options assessment, which is the 3rd of those 3 publications. You'll be pleased to hear that process is evolving. So we're working with Ofgem at the moment on an evolution into what's known as the Central Strategic National Plan. And that is currently proposed to take us away from an annual cycle to studying it every 2 or maybe 3 years. The first consultation from Ofgem has launched. I think it's actually now closed, and that was on the first stage of that. So how the future demand scenarios feeding into that process need to evolve. But keep your eye on the Ofgem website for future consultations on the Central Strategic National Plan. Next, we heard from Angus from SSE, in particular on the implication of wind developers in Scotland. Yeah,
sorry to interrupt. Like, we are running a little bit short on time, so I would like to ask you to wrap up in 1 or 2 minutes. Sorry.
Okay, yeah. Well, I guess the other bits I wanted to pick out were one of the elements that wasn't discussed, which was REMA, the review of energy markets, and in particular locational marginal pricing. I think that has a role to play alongside the solutions that were talked about from the other presenters. National Grid ESO supports a move to a more of a locational pricing signals in the market, and to address some of the concerns related that we do here. So one of the concerns we hear on locational marginal pricing is, yeah, shouldn't we be addressing the constraints with more transmission and not LMP? Yeah, we absolutely agree that there's accelerated transmission is needed. However, this should be alongside market reform, and the two are not mutually exclusive. Yesterday, we set out our views as to how you can ensure sustained investment through a period of market transition. And those slides will be uploaded towards the end of this week and will be available on our Future Energies Net Zero Market Reform website and part of the ESO website for anybody who wants to catch up on that.
Nice, that's brilliant, Robin, thanks. I think you covered the issues very well, and also you showed that, I mean, you started praising the success we've done in the last 10 years, that it's not been an easy task to install of these renewables, to manage the grid, such a changing grid, and the task ahead is very big. So yeah, there will be a lot of work for the ESO coming ahead, and we're really looking forward to what's coming out of the new consultations. And since you touched on REMA, I would like to give a quick fire question for all of you. So for who's not aware, REMA is the electricity market reform that that is undergoing now, and will give us the rule that should guide the market towards 2030 or even afterwards. So I would like to ask all of you, what is your single most important thing you would like to see from REMA? And I will start with Barney, because I know you have another commitment and might have to go very soon.
Thank you. So I think that the biggest issue for us in REMA is the locational pricing side of things. As Angus said, there are a lot of other factors that define where you would build a wind farm or other generation asset, around planning, around grid constraints, and also renewable resource. So trying to fit everything into that one LMP framework to find where you go is a big challenge. So that's our biggest concern.
Okay, great, thank you. And then Gemma?
Yeah, so I think in general, improved locational pricing is absolutely fundamental to help the energy system transition to net zero. So I do see a much bigger need for it to play more of a role in the UK. I think a lot of the conversations so far has been focused on LMP and nodal zonal pricing, but I think we're now at the point in the conversation where wider alternatives to this could be explored, and that analysis should be done alongside the conversations on value and the risks of LMP. So I'd just say we're at the point of widening the debate on what other possible alternatives could be, so that we can make an informed decision of what the right approach should be.
Yeah, thank you so much. Then Ben?
I agree with all the previous answers, and I won't repeat any of those aspects. My main message is, let's not mess it up. Consultations for change don't necessarily mean you need change. We do need some changes, but we still, there was talk about lots of different caps and tariffs and levies. At that moment in time, there was talking about changing the wholesale market structure. Let's please not. It's working. Incentives and so on. We just need to have what's working. So the upgrades in the control room to make all assets competitive and have a level playing field is really key to me. And let's stay focused on plan A. Plan A was, let's roll out renewables, and naturally we need to deal with the intermittency of those renewables, and obviously we need to build a network to the right level. And this is a slightly lobby type comment, if it might be interpreted that way anyway, but I've been slightly alarmed by the amount of chat about other stuff, from hydrogen to carbon capture to long duration energy storage, which I'm really cynical about, because our analysis suggests there is no need, or very little, in terms of anything longer than 10 hours. Let's get back to plan A and focus on sorting out, the renewable rollout's happening. We need the network rollout. We need energy storage rollout. Everything else is kind of borderline nice to have, in my opinion. That's my strong opinion. There we go.
Okay, very, very interesting point. And yeah, I see there is some debate forming on. And Angus?
I'm kind of going to build on all three participants, and I think closing out LMP, absolutely crucial, but at the same time focusing on widening out the things that deliver locational incentives for people to commit to, because it's clearly quite risky to commit even batteries in areas where congestion may or may not occur, depending upon what happens with the transmission investment. And there are things that can be done immediately to incentivize electrification and the demand side, which would definitely help with the problem.
Nice, great, very good summary, thank you. And I think Rob.
Yeah, I guess I just highlight to keep an eye on our website on our net zero market reform element, and there's a lot of really good analysis and studies that have been published on that as we've gone through the process. And as I say, the most recent one was a conference yesterday, and those slides will be updated as soon as we can. And then also to our wider role as we transition from ESO to FSO and take on advisory role to look independently across all of the options, and particularly across multi-fuel as well, multi-factor solutions. So keep an eye on the ESO website for both of those elements.
Okay, thanks. That's brilliant. I think there are a lot of points that could lead us to another 1 hour webinar, 1 hour discussion on some of the issues that we touched upon. Unfortunately, the time is not our friend today, so we're running out of it. And maybe before concluding, I know I would like to do a very, very last thing with a show of hands. I know we have different opinion on this panel about the positives and negatives of locational pricing, either nodal, zonal, or whatever we have. Just as a quick show of hands, who would like to see after the RIMA consultation or laws in the future, locational pricing happening, maybe ends out, and then the opposite, just to see as a quick, because there have been a lot of questions in the Q&A on this, so I think it would be nice to see your view on that. So first, who is pro of locational pricing? And
pro, yeah?
Yeah, who supports locational pricing? Yes.
I think Angus was pro as well, but I'm not sure.
No.
It's not. Okay, my mistake.
And against we have then. Okay, we are a draw. Okay, very interesting. I think we will need to do more research on this and try to discuss this a little bit more. So concluding this, thank you all again for joining this webinar and staying until the end. And a special thanks to our speakers, Barney, Gemma, Angus, Ben, and Rob. And I apologize, unfortunately, we couldn't address many questions from the audience, but I'll try to come back to you if there is any question specific on the report and on our research. And as a follow-up, I invite you to keep an eye on our website. We have a lot of events that are coming up, especially from this September, and we will be continuing this research on the UK's power sector. So thanks again, and I hope I'll see you soon in future events.